All right, we're live now, and I'm excited to have Steve Torsa with us. Today, we are going to speak about how to fundraise, and Steve will give us clear uh, tools and advice on how to do this. But before we go that direction, I definitely want to welcome you and give you some clarity why we actually here and why we bring people like Steve, like top speakers from around the world for you. We are a global community, and I'll give you a few words while we're waiting for the rest of the audience. So let me share the screen, and we are starting this session in a moment. Here you go. I'm sure you can see the slides. So those who are first time in our global community, these are our key contacts you can use to ask us questions or join us. We are on all social media like Facebook, LinkedIn, Telegram. You can find us as Go Global World. And if you want to communicate with our global community, just say Go Global World chat on those social networks, and you can ask global entrepreneurs questions and ask for advice, ask for help, or help them. Most importantly, that you help, and this is how the community works. Our mission, we unite English-speaking entrepreneurs from around the world who are trying to change our world to making it a better place. And we want them to be closer to global capital customers and like-minded people. In fact, your role is that not only just join and take and utilize these resources of global network, but help. 80% of the people I meet just trying to take more than give. So giving on our community is super important. This is how you build your global network, and this is how you will actually build your own reputation among people like you are. And we want to give you this opportunity because any company without network can't do business. So build your network and scale globally. And this is at no cost for you. This is our team, our global team. We have 40 people in 30 countries, and this is part of our global ecosystem. Those people are successful entrepreneurs in those countries, and they are happy to help you to access their local markets. But it doesn't stop there. We have over 2,000 entrepreneurs on our global network, members of the community, and they are all here to help out each other to build international businesses. Our bright team recently built a Telegram bot for everyone who want to build quality network and automate their networking. So once you register on this Telegram bot, it will automatically connect you with one member of our global community. And so you will decide to do Zoom call or the other way of other ways to interact with each other. But most importantly, this will automate your networking on a global scale, and once a week will offer you a person from the community so you can expand your network and then find new opportunities in different parts of the world. This is fun sticker, so you can use it, enjoy it, communicating with each other on the community and outside the community. We have created it for you, so if you like it, enjoy it and have fun. So what I want to say that we believe that access to knowledge, how to build international companies and scale them, at least on a basic level, have to be accessible by all entrepreneurs, and I believe it should be free. That's why for the past 1.5 years, we bring the best speakers like Steve, like Bob Dorf, like Elias Tribulaev, Steve Hopman. Those are global speakers, have high quality expertise that you're unlikely to find anywhere. And they come here to share as giving back to global entrepreneurs so that you can apply your knowledge, this knowledge and expertise to your own companies. And this is how you actually use this platform to ask the questions. So use this opportunity and ask questions, Steve, and join our future webinars. This is our global partners. For example, Steve is from Australia. In Australia, we have Gold Coast Innovation Hub, a Mind Hive community, but we also have partnerships in Eastern Europe, in Israel, in Western Europe, in United States, and all these partners exist there for strengthening our ecosystem for you, so you can use this network for your own specific purposes. If this ecosystem helps you, we will be happy to connect and see what other opportunities would be for you. Just recently, we recommended one of the startups from Eastern Europe to join accelerator program at Gold Coast Innovation Hub, and they got accepted, and they are going through this exciting program. So lots of opportunities to go global, and most importantly, giving back, not just taking. And before we continue, one other thing I wanted to tell you, I'm going back here. Before we start our webinar, guys, we are streaming. So I want you to spend 5 seconds to press the like button. This will help us to expand our stream to more entrepreneurs, bright people, and help them. So please do this. Subscribe to this channel. Also, once Steve will say about his resources, please subscribe to his YouTube channel, Wholesale Investors. It's also important. This is how you will support us. And if you comment and share this content, it also helps us a lot. So now we are ready to start. And I'm happy to present you Steve Torso, the founder and managing director of Wholesale Investor. And he recently spoke at our community a month ago about fundraising. And what really amazed me about Steve, that he is not only an experienced person with fundraising and has huge venture investors on his network, but he knows how to explain complex things in an easy language and give it to you in a very engaging way. I really enjoy when he talks about entrepreneurship and venture capital, and I'm super excited that Steve joined us. So Steve, welcome. Please tell us about yourself. Please
Sure.
Start on the topic. Thank you.
Thanks so much, Daniil. So look, I basically, obviously the co-founder of Wholesale Investor and also CRISP, and now also WI Capital as well. Wholesale Investor is a leading sort of private investment platform where we connect high growth companies with high net worth investors. So we've been doing it for 12 years. We've been doing it for quite some time. Over the last 2.5 years, I've spent a lot of time educating on the capital raising process. And sorry, my light's going to go out from time to time because it's an automatic one. And I started speaking on the topic of capital raising, and simply because I was going through the process myself. And whilst we work with a lot of companies that raise money and we do a lot of promotion for companies that raise money, I hadn't gone through the process from start to finish myself. And I realized my skill set at promoting opportunities was very different to actually going from start to finish. And so 2.5 years ago, I started this process of how do I convert capital raising from a mysterious art to basically a science and a process. And there's so many things that I've learned along that way. The biggest thing I want to basically convert to everyone is that the process you're going to go through in raising money is super emotional, and no one really tells you about it. And it's an absolute emotional roller coaster ride that you go for. And I basically want to help people understand what are some of the myths, what are some of the challenges, and just put some reality around what it actually takes to raise money. So what I'll do is I'll get into the presentation now. Look, I love engagement. So effectively, the more engaged you are, the more it helps me. It's basically, I can see messages on the stream, but I can't see them on YouTube. But if you've got any questions or if you want to make any comments, please put it on the YouTube chat. And then obviously I'll respond to those as I'm going through the presentation. So, all right. So now I will get into the actual presentation. Daniil, can you add my PowerPoint presentation to it? Okay, there we go. Okay, so now, so let me kick it off. Okay, so who is this session for? So really, like I do this session as I really want to target companies that are looking to raise either now or over the next 12 to 24 months, investors that are looking to assist companies with their capital raising process, or advisors typically involved in the ecosystem. So for me, I know that everyone adds value to a capital raising process, so I just want to facilitate that. Who is it not for is actually just as important as well. If you're looking to grow organically, then this, doing a session on capital raising is not for you, or you just may find it interesting. Or companies looking for a miracle solution for raising, and there just isn't one, right? To be clear about that. So, for me, when people talk about capital raising, they talk about it like it's an event. For me, I talk about capital raising because it's a process, right? And that's what I've learned from some of the top people in corporate finance, investment banking, brokers, etc. Is it's a process leading into event, not just the event. So there is a bonus that I've got for everyone at the session. So if you make it to the end, feel free to reach out to me, and I will send this through. But basically, this book has really helped me change the way I see business and help me understand the way to build value inside my business as well, beyond the revenue. And it's really focused around companies that are looking for that sort of strategic exit. The agenda for the session. So just to go through that, bit of introduction for me, then obviously the workshop, and then I'll go through a bit of a section about understanding investors, okay? And then obviously people ask questions about WI, happy to answer that at the end. Now, the reason I did this is because when I surveyed our clients, or when I surveyed companies that were sort of in our ecosystem, I found out that 75%, nearly 75% of companies are doing their own capital raise. So what that meant for me is that there isn't that much education around capital raising, except for how to pitch VCs and how to do a pitch deck. And so I really want to make sure that I go as in depth and as structurally, and as far as provide as many sort of systems as possible in going through that process. So firstly, the why. All these are the different reasons as to why I actually do this. But one of the big ones is I just want to help people not make simple mistakes in the process that you commonly see with founders making, and also really manage the emotional process that typically goes along with capital raising. Now, ultimately, the whole reason is that we raise capital more efficiently and that with it, right? The process before, and what it'd be possible if you can mention how many capital raises you've done, whether this is going to be your first round, second round, third round, 10th round, whatever it may be. If you can put in the YouTube chat how many capital raising you've done previously, that would be really helpful, just so I've got some sort of perspective as far as how active you've been raising capital previously. Now, understanding I'm also on I think it's about a 10-second delay on the communication part. Okay. So these are the typical questions that people ask me as far as, did I come from a wealthy family? Did I go to a top private school? Did I go to a top university? Did I go to university at all? I said, I get asked these types of questions, and the answer to all of them is no. Everything I've done is just pure hard work and pure building networks. I'm very, very fortunate about who I'm surrounded by today, but absolutely every single inch of it was worked for from my side. My actual background is as a marketing consultant to start with, and then I moved into corporate advisory, and that's where I fell in love with innovation. So marketing was my first love. Corporate advisory or working with innovation is my second love, right? So now, obviously, I don't do corporate advisory now, and hence why we've built a platform sort of in this area. But innovation, as I said, is my love. For me, obviously, wholesale investor, I could count Investec, which is a London Stock Exchange listed investment bank, as a shareholder, and also BMYG as a shareholder as well, which is an Australian VC. I launched CRISP in 2019, and the idea, and I'll give some sort of perspective on that in a second. We've built a network of over 30,000 investors across mostly Australia, Singapore, and also the UK. And also we have worldwide shareholders. So I'm fortunate enough now that I have shareholders from 7 different countries that have participated in our previous capital raises, to give you some perspective. And all of them come off our database. Okay, so to give you some perspective, we're the leading private investment platform across Australasia, and typically we target high net worth professional and international investors, and obviously family offices. CRISP stands for Capital Raising Intelligent Investment Secondary Platform, and we built that basically to be an end-to-end solution for capital raising, and effectively to empower founders in their capital raising so they can actually take control. Because I get really frustrated when I see founders just emailing out pitch decks, and they've got no visibility, they've got no intelligence over the process, and typically no control over the process. So what I learned is when I was able to get that sort of control is that I was able to raise a lot more money. Our vision for us is creating opportunities for tomorrow. Everything we do is focused around that. And we're passionate about empowering innovation, ambition, and also capital. From a mission perspective, effectively, we utilize technology, platforms, and partners to connect emerging growth companies with high net worth investors. So that's us at our core. Now, our experience, and the reason I show you this is because I want you to understand, typically I always have people watching, saying, that's fantastic, but I do this. That's fantastic, but I do this. We've effectively worked with every single sector that there is, and we've seen success with every sector. And I said, I understand that this is a process, and I said, this is a marketplace. Companies we work with are typically from the sort of pre-IPO from commercialization growth right through to being ASX listed. We've obviously worked with digital currencies, and also we work with funds and property opportunities as well, and small cap listed. So to give you some perspective, we've seen, what this story on the right is actually our largest single transaction from a single investor into the company, which was Booktopia. This company had previously struggled to raise for 4 years, and we were fortunate enough to come across them. And there's a funny story about how they met their investor. It literally happened at a networking function that we were hosting quite late at night, and a series of events led to it. And obviously it ended up being a successful story for us. We've had transactions from as low as 25K to as high as 32 million, which one of our clients has raised from us. And I think it's up to 34 million now. And we've seen everything in between. So I think that's important to set from a framework perspective, because often people think that when you're dealing with high net worths, that they're literally just throwing millions of dollars at different opportunities, when that's actually not how this space works. And I'll go through that in my presentation. But ultimately, what I'm aiming to do is to answer your question, and that is to say, yes, it is likely that we have worked with someone like you. So I hope that sort of provides a good perspective to start with. So now I'll kick off into the workshop. And as I said, if you've got any questions as we're going through this, please feel free to ask. I've got the chat box. Let me just make sure I got that. Okay. 1 second. There we go. I've got the live chat open. Okay, now I can see the live chat. Fantastic. Yeah, so as I'm going, if you have any questions and any feedback, it's really helpful for me to go through. And thanks, Sensor Guiding, for putting in about your first raise, and obviously first time for you as well, SBU. Okay, so let's go through this. So first thing, what I love to do is I love to go through the myths of raising capital. Now, basically, one of the first myths that you hear from people is that it only takes 2 to 3 months to actually raise money. And I've just found that that's completely inaccurate. In fact, fewer than 5% of companies are able to raise capital in under that sort of 2 to 3 month time frame. Most companies typically take anywhere from 6 months, 9 months, 12 months, 18 months. Some even take up to 2 years. Some are just consistently raising capital, and that's also a strategy we actually recommend for companies. But what I found is typically when you go to raise capital, is people put massive amounts of pressure on you to raise capital in a super short period of time. And that's just unfair to you as a founder, and it's actually not pragmatic as well for the growth of your business. Now, the second one is that people think that if they're using advisors or if they're using sort of corporate finance groups, they typically have sophisticated analytics or software. The reality is less of them are using any sort of analytics whatsoever for different capital raises. In fact, most of this industry is still driven off just basic virtual data rooms or just email and spreadsheets, right? It's amazing how many investment banks are still driven off Excel spreadsheets and emails, to give you some perspective. Now, the last one may be as a surprise for you is that VCs are the main investors. Now, obviously, VCs are super proactive throughout the UK, throughout Europe. What we've also found is that a lot of high net worth family offices, corporate investors, also capital markets are also super active in this space as well. So often what happens is when companies can't get access to VC money, they don't really know where to go. But they forget that VCs typically invest in less than a 1 in 100 companies. So the question you have is, well, where is all that money coming from for the companies, right? So as I said, we've seen a lot of success in raising from high net worth, from corporate investors, and also family offices as well. And I can see that for B2C type businesses, raising capital from equity crowdfunding could be appealing, but that does come with some caveats. The day in the life of an entrepreneur that's raising money, I think this summarizes it really well. It is effectively such an emotional roller coaster ride as you're going through that process, because effectively the way it works is when an investor says yes, they're going to go ahead, you feel like you're bulletproof, right? But when you're getting rejections, when people are telling you why they don't like your business, like your model, like your idea, you have doubts, you have fear, and often you blame, or it gets converted in other sorts of ways. But then when you have an investor come on board, you're like back to being bulletproof again, right? And this is the emotional cycle of a founder that's going through a capital raise, and it is 100% normal. I go through it. I'm sure Daniil's gone through it. Most founders go through this process when they're actually raising, right? Now, when I meet with investors, they always say to me, Steve, I want you to introduce me to the good deals. And then my reply to them is always the same, right? And it's like everyone has their everyone has their version of what is a good deal and what is not. So I always ask them, what is a good deal for you? And the reason for that is they have their own backgrounds, they have their own experience, they have their own ways in which they have made their money, right? And typically what that means for them is that, I said, they want to add that value, experience, expert skill set, etc., networks to the opportunities that they're investing into. That's why a marketplace is so different and so much more valuable, because there's different people involved in it. And effectively, you want investors that can add value to your opportunity in some way, shape, or form. Now, what companies want is they effectively want you to introduce you to the good investors. Now, I always ask them, I said, I can do that, but how do you know that investors are going to be interested in you? Right? Because once again, investors have their own criteria. They have their own strategy. They have their own things that they're looking for in opportunities, right? And I think that's important to understand. Not every investor is relevant for you, right? So, and I said, when I'm typically having conversations with investors, I want to understand what they know about my space, what they understand about the problems, about the frictions, about the inefficiencies, etc., because then I can understand how relevant my opportunity can be for them as a potential investor. Now, I use this story of Blackbird because it's quite famous for Australia. But typically what happens is when you go to raise money, especially for the first time, it's a lot harder than what people think. And in the Blackbird story, so Blackbird's one of the biggest VCs in Australia, and they put out these stats that to raise for their first fund, they did 500 meetings. They met with 97, they basically had 97 investors come on board, and they raised $29 million. Right? And it took them nearly 2 years to raise that money. Right? Now that they started off in 2012, and then they finished around sort of 2013 for that close. Right? So 2 full years to raise the money. But what does this tell you? They probably would have had to try and get 1,500 meetings to get those 500. So they would have contacted 1,500 people to get 500 meetings to get 97 investors to raise $29 million. So the average investment amount was $300,000. But their conversion rate was 1 in 5, because these guys were already successful. But look how much effort they had to go to raise for that first fund. So if you're a first-time founder that's raising money, so you really need to understand that it's going to be more difficult than what you currently think. And it's such an important thing to understand, because often we go in with our eyes wide open thinking people are just going to be throwing money at us. And that's our expectation when we typically go into this process. But the reality is often different. And after 2, 3, 5, 6 months, we can be frustrated and we feel like we're basically begging, for investors to come on board. I said, this is often the experience of someone when they're going through their first capital raise, because no one ever really teaches, I said, the end-to-end process for actually raising money. So what is a capital raising? And I think that's an important question to ask. And effectively, when you think about it, capital raising is just a marketing and sales process. The first step is to build a pipeline of potential investors. The second step is to convert those potential investors into actual investors. So that's it. It's really, firstly, the investment process, the marketing process. And the second one is the actual sales process for the conversion into actually being a shareholder. Now, what is the equivalent for that? And I love using this as an analogy, right? So think about this. imagine if you hire a BD. Now, for the majority of you probably come from a business development background or a technical background, or you've worked with BDs, right? And imagine this. Imagine you hire a BD, they turn up on their first day, and you say, look, there's your desk. I put a brochure on your desk, AKA a pitch deck. Now what I want you to do is I want you to go out and sell, right? Just think about that. All you've given them is a brochure, AKA pitch deck, and you told them to go out and sell. You've given them no processes, no intelligence whatsoever, no analytics, no scripts, no CRM, and no pathway to success whatsoever. Just think about that for a second. And then you've given them no pipeline of leads either. So what is your chances of actually being successful? Highly, highly, highly challenging, like highly unlikely to be successful in that scenario, right? And that's why I tell people that this is the experience that most founders go through when they go through a capital raise. And in fact, this is probably one of the biggest challenges that we deal with and that most investors deal with on a day-to-day basis. And it's the Dunning-Kruger effect. And why I love this is because most people, they kick off their capital raise super confident, in fact, almost overconfident, but they've actually got no competence whatsoever. They've got no skill set. In fact, they think that I've got an amazing idea. People should be throwing money at me, right? People should be begging to get involved in this idea, right? And then as they start to go forward, they realize that they actually know nothing about the process and they start to get frustrated. They take it out on people or they get depressed or whatever. And they go through this emotional cycle, right? But the reality is for people that have been involved in cap raising for some time, you realize that, effectively basically where you want to get is to this area of I know nothing, right? Because that is when you are open to learning the most about this. And in fact, I encourage people to treat capital raising as almost another department of their business, because you've got sales, you've got marketing, you've got customer success, you've got your product department or your engineering team. I said, but then people, the thing that actually supplies the fuel, right, to actually put into you to grow your business, often people don't think about that and they spend the least amount of time on that area, and that fuel is required if you want to accelerate your growth, right? So one of the things people look at when I show this is they always look at what are the top trending sectors amongst investors. And what I love to highlight is not that. For me, what I want to highlight is this. The mistake, as I said, people make is often you see founders getting disappointed when an investor puts in 50,000 or 100,000 or 25,000 into their business, but it's common. It's amazing how many people that are worth millions put $25,000 and $50,000 into actual businesses, right? There's others that obviously put in more, put in $500,000, put in $1 million, etc. But it's amazing the people that get so disappointed when they get that amount of money, when actually what people don't realize is the follow-on investment where typically investors invest more into a company. And that is the important thing to realize about this process, is that always be respectful of money that comes into your company, right? Even if it's 25K, 50K, 100K, that's someone that's had to work hard for that money and they're deciding to stick it into you, right? And you'll be surprised how many will then put in larger amounts in the follow-on funding, which is highlighted in these stats, right? So our core principles for raising money is the first step is to get ready. Second step is to stay ready. The third step, which will maybe a surprise for some of you, is to always be raising. Right now, that doesn't mean that you're always taking money into the company. What it means is you're always having conversations with investors. So for me, just by absolute habit, I will every single day, I'll have a conversation either with an existing shareholder or a potential investor. I've literally made it part of my routine. And then people say, oh, how do you have the time to do that? It's literally 30 minutes of the day, right? It takes up almost no time. I'm doing meetings anyway. I may as well be having conversations with investors and potential investors as well. In fact, I learn so much from having conversations with investors, even if I'm being rejected, right? So always be raising is very important because you learn so much about your business. And then the last one is get to a fast yes or no, right? Because one of the longest, like I was doing a webinar a couple of weeks ago, and the longest drawn out no was 18 months, right? And that is not a position that you want to be in. So I always tell people is if you've got to make it so easy for an investor to come on board. Most founders ruin their own capital raise by making it difficult for investors. Set up your process so it makes it simple for them to come on board. Your job as the founder, when you're going through the capital raise, the first step is to go from unknown to known and then to success. The first step is about how do you create awareness and how do you manufacture visibility, right? In fact, one of the most beautiful things I got taught by a Singaporean friend of mine, Hike, was about manufacturing serendipity. You want an investor to feel like they have found you at the right time in the right place, and it's almost serendipitous in how they've actually found you. But really, all you're doing is just making yourself visible. You are enabling opportunity to find you, right? Whereas most people are trying to sell a secret, and it's just really hard to sell a secret. So our 5 steps are really quite straightforward, right? In the sense that preparing, profiling, promoting, presenting, and then publishing, right? And this publishing part is often what people don't do. Most what happens is most founders will focus on this presenting part, right? Whereas I focus on everything. I want to build as much awareness as possible. I want to do as much promotion as possible to fill my pipeline with potential investors that could be relevant for my businesses, right? And then when I know that, then obviously the presenting part's important, but then publishing. At the moment, I'm trying to communicate at least once a month with my shareholders, right? And potential shareholders as well. In fact, over this next month, I'll be communicating weekly because we've got a lot of things happening, right? Now, the problem that we don't know we have when we're going to raise capital, and I love this example, is the Blockbuster to Netflix story. So in 2001, Blockbuster was absolutely killing it, right? They had something like 9,000 stores, they had 90,000 staff, stupid amounts of stats, right? But they got absolutely smashed by Netflix, right? And they were bankrupt by 2010. Then the other examples is taxis and Uber. Now, what has Netflix and Uber done that's been able to decimate these two areas, right? Blockbuster as a company, and then the taxi industry, right? I wouldn't say decimate, sorry, disrupt it or enable it for themselves or create value for themselves in an area that's already established, is they made it more efficient, right? So my feedback to every company is if you don't make this process streamlined for investors, you lose the investor. I said, that is effectively our job. Our job is to create make it feel easy for them to get to know us, to get access to our information, to answer the questions that they're going to be asking before they even ask them, right? Because our competition is the 30 other founders that are pitching them for money. Just think about that. At any one time, there is at least 30 different founders pitching that potential investor for money. And that is your competition. You are competing with all of them. We always have to work super hard, and we're not entitled to raise money, right? No one wakes up every day entitled to raise money, right? All of us have to work incredibly hard for it, right? And so it doesn't matter how early your startup is or how late a stage it is, just expect you're going to have to work for it. You know, the only time that you're going to have investors absolutely throwing money at you is if you're achieving 20% month-on-month growth, or if you're consistently doing over 100% year-on-year growth. That's when you've got investors throwing term sheets at you. Until you hit that point, expect to work incredibly hard for your money. Now, investors in the private space, now I think this is also important as well. And this is what's beautiful about what Daniil is doing about building an ecosystem of entrepreneurs. At some stage, some of you are going to go through exits. And at some stage, you're going to look to reinvest some of that money back into the next generation of founders coming through. And understand that is completely normal, right? So lawyers, accountants, corporate finance people, tech consultants, they all can be potential investors into your company. People have this preconceived idea about what investors look like. To me, they're just people who are passionate about the space that happen to make money in the space and just happen to put money back into it as well. And I said, just as a quick note to say to Daniil and to everyone that's watching, this is such a special thing that you guys have built as far as a global network of entrepreneurs. You know, because to me, I think it's powerful. Community is such a powerful thing, and ecosystems are incredibly powerful. We never know when the right person can make an absolute difference in our business. In fact, the game that we're all in is that one right introduction can completely change the entire trajectory of our business.
I completely agree with you about that.
Mate, we just have to speak with 100 people to get that right one conversation.
Yeah, in fact, I looked at the statistics in Silicon Valley, and on average, to get one interested investor, you have to do about 150 pitches to other various of investors to get one interested. It doesn't mean that he will invest. It's so hard. Yeah.
Correct. And I said, but what's crazy is I find that, and I don't know if this is just in Australia or sort of maybe this area, but it's amazing how many founders think that they're entitled to raise money, and none of us are. Like basically, we have to pitch for whatever money, and we have to expect to work hard in the process. And that's why I said I love the idea. And so I love communicating about this process, because what's nice, everyone just wants to pitch, 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 pitch. But what if you just encourage them to learn more about you? What if you encourage them to follow you? What if you provide them with updates for 6 to 12 months before you actually pitch them? See, what happens is this whole space focuses on the transaction. What you should be focusing on is the relationship, right? Give people the opportunity to get to know you. Effectively, what people are trying to do is to go from a first date into a marriage, right? That's effectively how this space is at the moment. Now, I've just got some questions on here. Someone's wrote howdy, Garen. So is it true that it equates to a full-time job raising capital for a founder? So Sensor, if you listen to what I mentioned before, I said, I just try and do one meeting a day. But in saying that, I'm always thinking about it. I'm always working on it. I'm always thinking about, driving investors to my deal room. I'm always thinking about communicating to investors. And also I'm thinking about the strategic milestones that I need to be aiming towards for the business as well. Just getting amongst it with Dimitri, Daniil. Looking forward to sharing more with you soon. Okay, cool. What is the limit of designing slides? Okay, everyone's different on this one. I've got, I think, 25 slides in my deck. Some people say 10. Everyone's got different perceptions on this. Effectively, there's plenty of templates online that you can actually copy. The simple thing is just make sure you sell the opportunity, not the product. I think would be the best advice that I would give to everyone. Okay, so next one.
I just wanted to add on this. It's actually a great, suggestion about 20 slides. Though I am promoting the idea of 12, 15 slides maximum.
Yeah.
And but I think to add to your point is that. Um, if you're talking to a marketing person, they would say like you have to have a like very sleek, nice looking slides. Everything should be like really the best looking. But in fact, I think investors are looking like to de-risk your company to make sure that you are investable. So you have a higher chance to get invested. And you may correct me if I'm wrong, but it seems like the quality of nice design on the slides is not that much important versus the making sure that the content, right? You answer their questions, so you are not too much of a risk for them. So you might, and that they can find a way to make money with you.
And if you're a startup, Daniil, like I think 12 to 15 is spot on. Like for me, obviously I'm an in-motion business and there's quite a few different elements for things for us. So, 12 to 15 is nice. The most important thing is if you show this to someone who doesn't know you, do they actually understand what your opportunity is? Do they understand what's unique about what you're positioning? Do they understand what's unique about, the size of the market that you're going after? And that's the hard part. And one of the things, I was speaking to an angel the other day and they said, oh, I had this every week we have companies come and say to us, what we're doing, no one else is doing in the world. And then they basically just turn around and say, it's great you say that, but literally I've caught up with 4 companies in the last month that are doing exactly what you're doing.
Yeah, especially when you're saying I don't have a competition, and all of a sudden,
Correct.
like you Google it and you find like at least 5 or 7 competitors.
Yeah, so Garen's just wrote pitching the opportunity and not the product is great. Yeah, I see this especially technical founders. Technical founders really want to spend a lot of time pitching the product. And I think if you think about the best way, and I heard an investor say it best in that, I'm not here to buy your product, I'm here to buy the opportunity. And I think that's a nice other way to think about it. Okay, so in this preparation part, so the first one is to basically just create a simple deal room, right? And then also I've got a deal room that's set up for due diligence as well. You'll see some of the snapshots of our platform. But as I said, I'm just trying, this is some of the docs that I've got in my deal room. As I said, I've just tried my best to simplify it as much as possible. And what I do is I actually include frequently asked questions. And for you, I was going to say, basically the importance of frequently asked questions is you want to answer the investors' questions before they ask them. Remember how I said you want to get to the fastest yes or no possible, and you want to simplify the experience for the investor? Then just answer their questions, right? Because for them, they're going to, if one of the most frustrating things is answering the exact same questions over and over again. This just helps simplify it. Yes, opportunity, not the product. Yes, they want to see a demonstration, but they want to understand what the opportunity is, right? So most people spend so much time, especially in presentation, selling the product. Definitely, I recommend doing some sort of demo for investors is also helpful as well if you're at that sort of MVP stage. Okay, getting investors. Okay, so I'm not so Amir, just so you know, most of the companies we work with are in the commercialization growth stage. Getting investors at the prototype stage. I've actually done videos on this, right? And basically, I love doing videos talking about the relationship between investor and founder. And to put it this way, the way I've broken it down is into 5 different levels. So at level 5, a level 5 relationship is someone that's known you for 10 plus years and you've actually made money together. A level 1 relationship is a completely new contact. So your best bet to raise money on a prototype is someone that's basically a level 4 or level 5 contact, as someone that knows, likes, trusts, respects you, and has a long-term relationship with you. Hope that helps. Now, the elevator pitch, I think, is one of the most important aspects of actually raising money, because every single day you have to pitch what you do. I've heard people ramble for 20 minutes before they get to what they actually do with their actual business. And I've also seen it where I've had a client that I was working with who was massively frustrated and upset and all this sort of stuff. We helped them shape their elevator pitch, and also we helped them with some of their conversations with investors. I watched that company go from struggling to raise to basically raising $6.5 million in the space of 12 months. And then they got acquired by a listed company, and then they went on to 10x, right? There is a massive power in learning how to pitch your business, or learning how to communicate a solid elevator pitch for potential investors. Now, profiling your business. This part of unknown to known is actually the most important for all of you, right? Because the reason why I call it capital raising brand, and I coined this because the whole idea about brand is it allows someone who is basically looking at something to make an instant connection. If you see the Apple logo, you have an instant connection with that brand as far as what it means to you in terms of quality, what your expectation is from the product, etc. So in thinking about a capital raising as a brand perspective, what are some of the elements you have to work with? Your board and management is one of them. Now, if you've just started, you may not have built your board and management just yet. That's something you should be thinking about. Your team, obviously, right? If your team has had previously successful exits, or they've been part of high growth opportunities, that's something to communicate. Your existing investors, right? Even if they've only put in small amounts, being able to communicate who your shareholders of your business are is super important, because it's basically a trust and confidence indicator for other potential investors. It means that someone else has done due diligence on you and they've decided to invest their money into your business. Now, the next one is if you've won any industry awards, right, is helpful, or if you've received any government grants, that's also helpful. The last one I love, the last one I'm going to talk about before metrics is sector. There's a beautiful saying that a rising tide lifts all boats. When your sector is on, you have to run as hard as possible. If you're in fintech and it's fintech's time in the spotlight, drive hard. If you're in health tech and that's your time, like, think about this. All the companies that were able to benefit from COVID raised astonishing amounts of money over the last 18 months, right? And that's typically how markets work. Money goes to where the attention is, to where the interest is. So said, when your spotlight is on, you need to try and raise as much money as possible. Now, the last one is show metrics. Metrics is the easiest way to capture an attention of an investor, because it shows that you, and especially if you said, this is what we're going to do, and then you actually go and do it, that is the demonstration of metrics that investors are looking for, right? They'll understand you're dealing with problems, you're dealing with challenges, you got fires to put out, you're managing growth, you're having challenges hiring, they understand all of that. They don't care about any of that. What's important for them is that you do what you said you were going to do, because that's your ultimate trust and confidence indicator in the process. Now, and this goes back to what we were talking about before, often what happens is we like to talk about our product. We like to talk about the intricacies of it, right? We love to go into detail, right? Often this is boring for an investor. Now, for me, I had an investor after an hour and a half lunch turn around and say, look, really appreciate your passion and enthusiasm for your product. I just want to let you know that I'm not going to be investing, right? Because I said, for me, what I care about is, what is the actual vision you're building, right? What is it you're actually working towards? And I was like, I felt my heart sink at that moment. So do you know what I do for myself? I actually bullet point my conversation so that I don't waffle, right? Which is one of the hardest things to do as a founder. Correct. Definitely investors look at team, especially at the early stage. Team, they also look at all those other mentioned team, metrics, other investors. They're all things that you can use to capture someone's attention. Now, I just want to make sure everyone's clear on this, right? So you just want to sell what that vision is that you're actually working towards building, not talking about the intricate details of what you do every single day. Now, promoting your capital raise, there's lots of different ways to do it, right? Whether it be online, email, media, platforms, industry publication. People have this aversion to investing into promotion of their capital raise, or just investing into promoting themselves in general, right? I have absolutely no issue in marketing. Maybe it's my background of being in marketing. I know what this game is. This is a game of awareness. I want to create visibility. Like, I may be capturing, like when I do videos online, I may be capturing the attention of an investor that could be investing into my business 2 to 3 years from now, that I have never met, don't know, and haven't had a conversation with yet. It's an odd space, right? But you said you have to, nothing's going to happen unless you have awareness about what you're actually doing, unless you're building up some sort of momentum. And I'm just highlighting at the moment that investors definitely are a lot more aligned and also strategic as well. Okay, and then when you're presenting, give yourself a time frame to actually do that. So when you move in that momentum stage, right? So you built awareness, you built up interest, and now you're in momentum. Give yourself a period of 60 days of actual interest building, of being solidly aggressive in just building your interest into your actual pipeline, right? Because the goal is that you want to have at least 50% of your capital raised before you launch it. There's a reason why equity crowdfunding platforms do that. They go and make you raise the first 50%, right? Because that's the hardest. The hardest part of any raise is actually the first money to come in, right? So this is why momentum and awareness is important. But you want to try and get at least what's called indications for at least that first 50% of the raise. So process, create the visibility, and then go into pre-launch. When you actually launch, pitch hard, do one-on-one meetings, get involved in pitch competitions, get involved in virtual showcases, live presentations, industry events. It doesn't matter. You'll never really know what's going to be the most effective for you. But I say be across it all, because this is all about a game of just building a pipeline of people actually coming to you, right? And then when you do launch, is be proactive, right? So do webinars for people, do conference calls, send out updates about how your progress is, do addition, say I've got webinar in here twice, right? You know what I'm sort of fan of. Do video updates. It could even be product releases. Effectively, the way I think about it is I just want to give people an opportunity to engage. It's over to them whether they engage or not. My job is just to provide them with that platform where they've got the opportunity to. And if they want to progress conversations with me, I'm ready to do that. And then when you're publishing announcements, be consistent about it. You can talk about recent awards. You can talk about metrics, performance metrics. You can talk about media that you've received. You can celebrate big company milestones. You can celebrate recent partnerships, etc. And you can also celebrate recent capital raisings as well. I find that's always an interesting one to talk about. Funny enough, mentioning about finishing capital raises actually generates more interest for raising capital. And here's a solid tip for everyone. The best time to raise money is straight after you raise money. Okay. Okay. Now, for me, gaining the insight into an investor's mind is everything because I want to have intelligence in the process. I just remember for me, for far too long, I didn't know what was actually happening. I didn't know what was of interest to investors. I didn't understand what was important for them in my raise. So I wanted to understand this. And you can see down this left-hand side, that's how many times people have clicked on that question. Right? So you guys know within 5 seconds what's important to investors in my capital raise. Now, this is a screenshot from my real deal room, right? You know what's important to investors because that's what they've actually clicked on. And that's important because otherwise you don't have intelligence. As I said, one of the keys to actually getting confidence in your capital raise or feeling empowered or feeling like you have control is if you have some sort of intelligence in that process, right? And as I said, just going and sending out pitch decks is not intelligence, but a systematic process of meet potential investor, drive into deal room, organize first discussion, etc., is absolutely the way you want to be thinking about it. And then also what's important is to know what your investor's thinking. So we've got the ability where we can actually see what's going on inside the deal room. I like that because what I want to understand is what's important to the investor that I'm having the conversation with. I said, because if that's important to them, then that's also important for me to know that I've got to make sure that I cover that in our actual discussions. Now, the other part that I find really interesting is I found there was a direct correlation, and we had this thesis when we were building Chris, that there's a direct correlation between engagement and actually transaction success. In my deal room, 14 out of the top 15 people in my deal room, as far as based on activity, you can see their little point scores down here, basically have all become shareholders. Right now, it's not because I'm amazing. It's just because it's a simple process that I've learned to follow, over this period of time. Right now, the reason why you should always be raising, I've just done a video on what is the greatest missed opportunity for companies that are raising money. Right. And the reason I did this is because I get frustrated that every founder wants to chase the next investor, the next investor, the next conversation, the next. And what they do is they forget to update all the previous investors that they've told about how amazing their business is and how great it's going to be. They forget to actually update them with their progress and with their milestones. One of the best things I've learned is communications of milestones and updates is super powerful. And just because you get rejected today, it doesn't mean you're going to get rejected tomorrow. I've now had it on 5 situations where people that rejected me over the last year to 2 years have now become shareholders. Okay, so a no today is not a no forever, and I think that's really important. Now, the visualization benefits of that is really quite obvious in the sense that, effectively you can take your conversation time down from being 3 to 5 hours per investor down to about 30 to 60 minutes. Said, it's funny enough, I spend more time with my investors after they become a shareholder than what I do before they become a shareholder, right? Because I'm very relational in that way. And also I try and set it up so it's easy for them to know what I'm doing. And also you want to improve your conversion rate. So if you're meeting with 40 investors and you're currently getting 1 converting, you want to try and get that to where it's 1 in 10. And you're always adjusting, refining, learning, etc., right? But it said, relational is the key. And I learned from one of my best friends who basically did a capital raise, or in the media, they said he did a capital raise in a week. And I messaged him, I said, mate, how did you do a capital raising in a week? He goes, easy. He goes, I've been working on it for the last 12 months. And I was like, okay, that summarizes it quite well. Which tool do I... So SBUX, I'm completely biased as far as what tool do I recommend. I recommend my own platform for raising money, just because I built it, as I said, I built it with founders in mind, and I built it with the idea that I wanted people to have control. I want them to have intelligence in the process, and also I want them to be proactive. It frustrates me when founders said, there's a game of there's times you've got to promote, and there's also times you've got to be proactive yourself as well. Chasing investors takes the most important resource, time. So after a while, one just gives up. So Garen, what happens is people chase investors, but they're chasing a decision. They're not chasing a relationship. Focus on using communications to build your relationship and to build your portfolio of traction, right? And if you don't have any, then focus on building traction and focus on building those milestones, right? And then for me, obviously raise more money is the obvious outcome that you're actually after. As I said, all too often what happens is people just pitch, and they focus on a transaction. Move from focusing on a transaction to focusing on the relationship. If you pitch an investor and they say no, then say, look, hi, said, appreciate that you're out. And I appreciate you're not investing in this round. Are you okay if I keep you up to date with our progress? Very rarely is an investor going to say no. They'll actually be amazed. When I did an interview with Jason Calacanis, he said single digit percentage of founders keep them updated with their progress and with their growth. Just think about that. Jason Calacanis, less than 10% of people that they reject keep them updated with their progress, right? So mobile apps monetize. I gave some a whole bunch of examples beforehand as far as all the different things you can talk about when actually communicating with investors. Okay, now this is my favorite part, right? So now I know there's a 10-second delay, so I will wait the 10 seconds, and I know I've got a bit of extra time up my sleeve, so that's a good start. So question for you all: what are the top 4 things that investors are afraid of losing? What are the top 4 things that investors are afraid of losing? I'll give some time to put in the chat.
Yeah, guys, please join this interactive session. It's very important for us that you answer these questions, and so we can give you our perspective as well to make it more personalized.
Yes. I love this part because everyone just focuses on the money part. The top 4 things that investors are worried about losing. Okay, money and thereby reputation. Thanks, Garen. Money, time, reputation, status quo, principles. Interesting. Yep. Okay, so everyone knows money. Okay, and the second one was everyone said time. What else are they actually worried about? So the next ones, reputation was mentioned. Now, what's interesting is the most important one wasn't actually mentioned.
FOMO,
The
fear of
biggest
missing out. No?
another opportunity. It absolutely is. So think about, so in Australia, there's a company called Afterpay, which basically, went from being a startup in 2015 to being being acquired by Square for $39 billion. So what that means is every investor that put in money into most other companies except for Afterpay, they will be disappointed that they didn't put that money into Afterpay. They could have literally turned $25,000 into millions if they put that money into Afterpay. Every investor is worried about missing out on the fear of missing out on other opportunities, right? So just think about that. When an investor invests into you, they could have invested into every other opportunity and they actually chose you, right? So, the opportunity cost part is one of the biggest loss aversion aspects. Now, when you're dealing with an investor, this is the truth of it. No investor wants to be the first one in. Have you ever noticed how hard it is to find a lead investor? Right? Lead investors are one of the hardest ones to come in. The first investor that comes into a round. But then no one wants to miss out. So if a deal is hot, then you see FOMO kick off and everyone wants to come in. And you see it so many times with companies where they really struggle to get those first investors in. But then when it comes time to completion of the round, people are worried about missing out, right? And that's where the bandwagon effect comes in. Whether it be VCs, whether it be family offices, whether it be high net worths, they all invest together. It's amazing how many mates invest or friends invest alongside each other. Family offices invest alongside each other. VCs invest alongside each other. PE groups invest alongside. Like, it always is quite common. And then this last part of FOMO. Pretty much all of us want to get to this stage, to the fear of missing out part, right? Because this is one of the hardest stages to get to. When a deal is red hot, then that's typically what kicks in. Now, the investor psychological process is they want to get at least 5x to 10x. So I don't typically talk to founders about their valuation, but just understand if they can't see how they can get a 5x to 10x return, then you really have to think about what your valuation positioning is. And I think that's really important. Then there's a short-term uplift, right? So some investors are looking for that short-term uplift. So one of our easiest deals to promote is typically pre-IPO, right? Because there's a short-term uplift and there's an exit, right? So if there's a potential short-term uplift with your opportunity, why? For me, I recently had this situation where we'd basically, raised capital at a valuation that was less than what it should have been based on where we were as a company. But we did that because we'd already started before we basically hit certain milestones that we were aiming to achieve. So investors kind of knew that there was going to be an uplift in this next stage for us, right? It's hard to do, but this is what investors are looking for. They're looking for any advantage which they can win. Now, the common mistakes for most founders is obviously overconfidence is a big one. The next one, unwillingness to invest into the process. The reliance on one potential investor, right? Or just one investor at all, even if it's a shareholder. And the last one is that the reliance on one potential investor with no time pressure whatsoever, right? So just think about that. It's one of these are the top 4 common mistakes we see. And I'll say it again, you are not entitled to raise money. You have to work for every bit of capital you get. What about preserving optionality bias with investors taking a lot of time to give yes or no? Can we say it's present? So look, as I said, if investors are taking a long time, you have to ask yourself why. Did you not have your strategy, your deal room structured, or your process structured right for the investors? If you make it easy for the investors to come on board, right, then they shouldn't be taking a lot of time. What I typically do, if someone asks me a question twice, I make sure I include processes, systems, or documents so that I never get asked that question again. Okay, next one. And then for me, successful capital raising, get yourself educated, use software in the process that has analytics, have a process for yourself, and then obviously just endlessly focus on finding, always be looking to get introductions to potential investors. Never deny an introduction to a potential investor. And then analyze, refine, repeat, improve, right? Because that's effectively what successful capital, no different to everything else. As I said, most people just go from pitch to pitch to pitch to pitch to pitch. So just focus on actual process, build relationships, build connections, etc. It takes a bit more time, but the result is actually worth it for everyone, right? And my personal benefit goal that I'm always going for is I just want to have confidence when I actually do the process. I want to have confidence that I can actually achieve the outcome of actually raising capital. All right. Now, my last point, my final slide is capital raising is never free. You're going to pay in terms of time, terms, opportunity costs, missed capital, emotions, and experiences. It's always going to be a cost. And there's so many unpredictable things that can take place in a capital raising that people just don't talk about. But it's never straightforward. It's never easy. You could pitch to 100 investors and still not raise money. That's life. That's the capital raising game. Or you could pitch to your first one and they can invest into your company. It's just such an unpredictable sport. You just want to make sure you're doing your best to make sure you've got the right process for it. So that's my presentation and that's my details. So basically, if you would like to get the ebook that I mentioned before, so the ebook is called The Ultimate Exit. It's written by Tom McCaskill. It's basically about how you structure your business for a high valued exit and a strategic sale. It's been transformative for me in how I think about my own business. And I know it's added a lot of value to a lot of founders around the world. Funny enough, he's Australian, but actually made his money in the US. So I hope that's, if you're interested in that, add me on LinkedIn, send me a message, and, obviously, hopefully say something nice to me, and then basically ask for the ebook, and I'll make sure I send that to you. So that's my presentation. I'm going to get out of this, Daniil, and actually I'll leave that up for a bit just so people can add it. And then, happy to go over to live Q&A.
That is awesome. That is, before we go to live Q&A, I just wanted to share that I personally know a venture capital investor from Silicon Valley who is still struggling. They didn't invest in Uber at early stage, and they down, and they still remember this story, and they share this story in universities, and still I feel the pain of those people.
It's called their anti portfolio, the opportunities they missed out on.
Yeah, he's saying like, oh, we turned them down. It's like investors' story when they
Yeah.
screwed up. Well, guys, so now it's your turn, and now you need to use this opportunity to ask questions. But before we go that direction, please help our community grow, and so please subscribe, like this video stream, comment and share this video. It helps us bring this information to more entrepreneurs around the world. We are here to help entrepreneurs, so please help the YouTube algorithms to find those entrepreneurs. And subscribe. What is your YouTube channel?
It's just wholesale investor.
Wholesale Investor. So please subscribe.
Just so you guys know, on the Wholesale Investor channel, I've actually got a playlist. It's called Tips, Hacks, something about, tips for raising capital. And there's like about 55 different videos in it. So anytime I either deal with a situation or I have a client that's frustrated about a situation or had success in a situation, I typically like to communicate it, via video and sort of give updates. So hopefully if you go through that, it basically can answer a lot of different questions and issues that most people will come across.
Awesome. Well, thank you so much, Steve. And the presentation was excellent. I like it. And I think we have a lot of opportunities to partner similar talks in future. Guys, please use this opportunity and ask your questions. What is your question? We have a question from, okay, people are thinking. Anyone would like to ask any questions? Steve, you already answered.
There's about a 10-second delay, so I imagine it'll start to come in shortly.
All right. Let's wait. So in the meantime, we are waiting. Every time we are doing an event at Go Global World, it's truly global, because right now I am traveling, and currently I'm in Novosibirsk, and Steve in Sydney, Australia, and you are guys spread it around the world. And I know that there are some people on this chat from Greece, from Europe, from many places, from Australia as well. It's like truly global. Guys, do you have any other questions you would like to ask Steve?
And by the way, thanks Zakar, and thanks SBUX.
Oh, there's
Bulgaria, Germany. Fantastic.
Okay, so
US.
USA. So you see, it's all over the world. My question to you about fundraising. There are plenty of entrepreneurs outside the United States, and according to Crunchbase, 75% of unicorns by 2035 will be not from the US, which means that global founders that are now building something, they might become unicorns already outside the US. Yeah. So what would be the advice for you, or what would be your advice for global founders outside the United States that are trying to raise capital? The usual advice that they get right now, start sales in the United States to get first fundraising from the US. But it's not always possible, and sometimes
there's plenty of venture funds in the UK. There's plenty of venture funds across Europe. There's also plenty of different high net worths that they can speak with. It's funny, like what's beautiful now, so when we started WI, there wasn't the ecosystem that there is now. All of you guys can literally go to meetups all around the world to connect with people that can provide introductions to potential investors, right? It's just really, are you willing to be that proactive in going out and having those discussions to actually do it? For me, I'm fortunate enough, I've got my own platform and my own distribution base. There's plenty of different platforms you can try and promote. to me, as I said, there's no such thing as failure when you're promoting your business. All you want to do is just keep on getting more and more introductions, because at some time you'll meet the right person at the right location and they can make a massive strategic difference to your business. So, even if you are promoting, said people talk about raising outside the US, just be super proactive in having conversations with investors and trying to make yourself visible to them.
Yeah, I agree. And use platforms like Steve and the communities to expand your opportunities. I think those platforms and communities, they actually exist for you to get a shorter route to your investor, shorter route to your customer, and shorter route to your expertise, so you can start building something and expand and grow globally. If no more questions, guys, I see there are 14 people still with us.
There's three questions. There's three questions now. Would you say raising in crypto DeFi area now with vanilla funds is easier, harder? Have you met any cases with WI? So typically, like I don't know why you'd go with vanilla VCs for raising for crypto and DeFi when there's actually plenty of crypto funds. So if you've got a crypto opportunity, I'd be pitching crypto funds, or specifically companies that are related to blockchain specific funds rather than vanilla VCs. Unless they've got stated somewhere that they are investing into sort of crypto or to blockchain, I wouldn't bother. And yes, we've got 4 crypto funds as clients. So I'm in that weird space where not only do I have them, do we deal with funds, but we've got them as clients, and also we've seen them invested into our clients as well. One thing I've learned over the years is that British investors are slow and conservative. Silicon Valley. Garen, same thing for Australia. So one thing Daniil said was, you want to shorten your time frame to get to investors. I agree with that, but I don't shorten the time frame that it takes an investor to make a decision. Yes, investors outside Silicon Valley don't invest as quick as what they do inside Silicon Valley. Yes, that's what said. If you want to raise money from Silicon Valley, move there and start pitching there. But just know how much more competition it is. Like, you just got to. There's that reality of dealing in locations where you're dealing in and understanding that specific area. Is it true that in order to attract Silicon Valley money, you need to be? So strangely enough, I'm actually chatting with a Silicon Valley VC on Friday that I actually met at one of my events. I've got a Canadian VC as a shareholder. There's a company that we've got a small shareholding in that's basically raising money from a US VC, and yes, they are getting him to set up in Silicon Valley. I don't know if they're going to have an office there, but I imagine at some stage they will. But just remember, the last 18 months has basically made people realize they've got to do deals outside of their own area because none of us could travel. So the game has changed definitely over these last sort of 18 months. And the name of my deal room is CRISP, CRIISP. Have to do a little promo.
Yeah, we are happy to support.
Thank you.
More questions, guys. Okay, there is one more.
So SBU, yeah, everyone's looking for smart investors that can throw money at them. I don't know specific travel tech marketplaces, but effectively, I wouldn't focus on just travel tech. Focus on investors that are focused on marketplaces, because if they're focused on marketplaces, they typically would have gone down the different verticals. Also, note that probably travel tech may be a more challenging one at the moment to go down. Unless you're seeing something else. But obviously, places like it's completely gone from my head now. Airbnb obviously have done incredibly well in this period after being hammered at the start. But look, just focus where investors are investing into marketplaces. Don't worry about the travel tech part. Focus on the marketplace aspect.
And what do you think in what investors are thinking of investing in marketplaces. Since you mentioned that, I heard many investors are a little bit mm, pushing back on marketplaces because it requires a lot of investments on many sides of the marketplace, and it takes
Yeah.
quite some time to take it off for takeoff, right? And do you think it would be better to switch to a SaaS model, subscription model, some like simplified, or like keep going as a marketplace?
So it's funny you're asking me that, right? So we technically would be considered a marketplace, but we do have a subscription model. We do have a SaaS model for companies we work with, right? Whereas most marketplaces focus on a transaction amount, whereas we've gone down the subscription path. So for me, I prefer that as a model for our specific area. But look, I think when it comes to dealing with marketplaces, it's traction. If you can demonstrate that you have been able to attract, sort of for us, we've got a three-sided marketplace. It's very hard to get, it's easy to get one side of a marketplace, very hard to get a two-sided marketplace. So if you can demonstrate any traction in that, it's almost impossible to get three. It's very rare to have a three-sided marketplace like we've been able to create. I like all
Yeah,
these pop-ups you do, by the way, Daniil.
you like it? Yeah, me too. I'm so
Yeah,
fun.
I do.
This is the first time we are doing live stream, not with Zoom, but with something else. And this seems like a better one. If you like it, just give us a thumbs up. And yeah, and don't forget to, again, like. I see that 17 people on the stream, and the amount of likes doesn't match this number. So I, guys, want you to like this stream.
I won't take personal offense.
Yeah, and on the YouTube channels they usually say, "Oh, please smash the like button." So this is what exactly I'm asking. Steve, thank you so much for your time. This was an excellent talk. I think this is the time we wrap it up, and we usually wrap it up in an unusual way. So I want you to give the final words of wisdom. But before you do this, I want to share with the people about. Share with the people what are the upcoming events they will have with global speakers. So give us one moment, I'll get back to you. So guys, we are having more talks with global speakers like Steve, and what we will have in a few days, we have another Australian speaker from Sydney, Roscoe Paddison. He is a new money mentor, and he will talk about DAO, decentralized autonomous organization, as a way of funding for startups. And I'm not much into crypto, and I rarely do speaking about crypto, but this kind of topic got my attention, and that's why I invited Roscoe to speak about that. So use this opportunity, join us in a few days. We will have a speaker from Helsinki, Finland, about pitching with confidence. And Walid is a great speaker, and he has amazing emotional intelligence and charisma. So is Steve, and he will give you all the guidance and support on your pitching challenges. So use this time and bring your challenging questions. It will try to answer all your questions. The other thing, we are launching a stream with venture capital investors from around the world, and the first fund we will have from Copenhagen Capacity, AI investment manager Olga Duka, and Catherine Yushina will be our moderator on venture capital streams. And we will have more and more venture VCs coming from around the world, from different parts. And this is your time to ask your questions and maybe even pitch to some venture capital investors from around the world. The other great speaker we will have Lisa Malner from Copenhagen. She is also expert on Nordic startups ecosystem. So I want you to learn about opportunities in Nordics, in Sweden, in Norway, in those countries nearby. So maybe that ecosystem might be useful for you, and maybe your company can use that ecosystem for some specific opportunities. Let's see. We already had discovered a startup ecosystem in Australia. Even Australian government was talking at our past webinar. Singapore, and some other countries, and more countries to come. If you want to join our events and follow our events, just go on this QR code, and or just go globalworld.eventbrite.com, and you'll be notified about upcoming events. Also, we publish our events on our website, goglobal.world, and more events will be published in there. If you want to speak with global entrepreneurs, if you want to connect and expand your network, this is the main chat on Telegram we have. And this is where you can present yourself, ask for help, ask for specific connections. But most importantly, this is the opportunity for you to help others, to help other entrepreneurs to build your own network. And this is the chat where you can do it. Join it. This is our contacts. If you want to join our community, just go on our website. If you want to email us and you want to start onboarding to become a member, just contact us. We will help you with that. That's it. I'm thanking everyone for your participation. Thank you for your awesome questions. I think it was an engaging session, and thank you, Steve, for making this so interactive and bringing us difficult things in a simple language, so we all may understand how to fundraise. It's not an easy topic, definitely, and not everyone can speak in an easy language like you did. So we are grateful, and thank you for your time. We really appreciate it. What would be your final words you want to say to the community?
I mentioned it during the actual presentation. Focus on the relationship, not the transaction. That would be my main one. And for you, I'll just say it's a very special kind of person that sets up these types of opportunities and works hard on sort of bringing together speakers, you know, really for the idea of bringing together an ecosystem. So I just want to say thank you for the opportunity to have a chat to people that are part of Go Global. And also just, I said, I hope anyone that sort of that's watching either live or watches this afterwards realizes that, I said, it's a nice kind of human being that puts together stuff like this off their own bat and own work. And I know how hard it is to pull together speakers and to bring energy and promotion and so forth to these type of events. So thank you.
Thank you so much. That was Steve Torso from Australia, and we were talking about how to fundraise. Thank you, guys, and have a great the rest of the day in any parts of the world where you are right now. Goodbye.